Hi, I'm Hitender. I take care of tax and transfer pricing for SPR and Co. Today, we are going to talk about transfer pricing regulations in India. What is transfer pricing? How does it get attracted? And what are the penal consequences of not following the same? So, transfer pricing is being defined under Section 92 of the Indian Income Tax Act. This can be broken down into various parts. First, what is an international transaction? Any transaction which happens between two associated enterprises. It can be a sale of a transaction, can be a purchase of a transaction, can be lease of a tangible or an intangible properties. See, any bearing on the income or expense or the assets of the company would attract that international transaction. So, international transaction has now been defined. So, now we will move to associated enterprise. Who are all associated enterprise? Two non-residents can also be considered as an associated enterprise. Even a permanent establishment of a foreign company in India is also defined as an associated enterprise. Any transaction between a resident and a non-resident again can form an associated enterprise. Now we shall move to the requirements in Income Tax Act for an international transaction. Transfer pricing documentation. So as per Rule 10D, there is a requirement to maintain a transfer pricing study document for any transaction which exceeds more than 1 crore in a year. Any transaction between associated enterprise in aggregate, if it exceeds 1 crore, there is a requirement to maintain a transfer pricing documentation as per the Indian income tax regulation. So what does this transfer pricing documentation contains? So as per Rule 10D, it contains various areas like what is the industry in which the company is operating, how the industry is operating, what are the group overview. In the group overview, we define who are all part of this group, how they have been set up, in which part of the country they are being set up, who are all other countries where it has been put across.